Bulk and container shipping, two of the most important sectors in global shipping. Both are huge markets. Both pay sometimes high dividends, but they operate completely differently. And that's exactly what can be an advantage for us as investors. Let's start with bulk carriers. Bulk refers to bulk cargo. These are commodities like iron ore, copper, coal, and grain. Anything that is transported loose and in large quantities. There are different classes of ships here. From the gigantic Cape-size carriers, which can only pass through certain sea routes, to smaller Supramax or Ultramax ships, which can be used more flexibly. The bulk market is extremely cyclical. When the global economy is booming, more raw materials are shipped. Freight rates shoot up, and with them, profits and dividends. But in weak years, this can also decline significantly. Container ships, on the other hand, transport standardized containers. These range from electronics and textiles to machinery or food products. Container lines operate fixed routes between major ports such as Asia and Europe and are highly dependent on global trade and supply chains. During boom periods, like we saw in 2021 and 2022, profits can explode. But the same applies here. If demand falls or freight rates drop, margins quickly collapse. Why are we talking specifically about these two segments today? Because bulk and container shipping may belong to the same industry, but they often don't experience boom or bust phases at the same time. This means that anyone who has both segments in their portfolio can benefit from different market cycles. At the moment, we are seeing interesting starting positions. In the bulk sector, the ongoing high demand for raw materials, especially in Asia, is providing support. In the container sector, freight rates are normalizing after the COVID boom, but geopolitical factors such as rerouting due to the Red Sea or trade diversion are once again creating tensions in the market. Now, I will introduce you to 6 companies, 3 from the bulk sector and 3 from the container sector. I have all of them in my own portfolio, they all pay dividends, and each company has its own strategy and its own cycle. Let's start now with the bulk carrier. Stock number 1, Golden Ocean, a Norwegian shipping company specializing in Capesize and Panamax vessels. It mainly transports iron ore and coal. The main routes are from Brazil and Australia to Asia. My entry point was €7.25. A total of €1,276.36 is invested. The current value is €1,318.24. In total, I hold 176 shares. That currently corresponds to a gain of €40.88 plus a total dividend of €13.88. Golden Ocean has a modern fleet. A focus on efficiency in fuel consumption, is one of the largest Capesize operators worldwide and has a solid balance sheet. But like all bulk carriers, it is highly cyclical. The dividend policy was currently on a quarterly basis. The dividend was based on free cash flow. In boom years, double-digit returns were possible. In weak phases, there were often cuts or suspensions. Why do I hold this stock in my portfolio? There are several reasons for this. First, it's a leverage play on the commodity supercycle, especially for iron ore and coal. It benefits when China or India ramp up their steel production. Why did I speak in the past tense? That leads to the following reason. I'll explain this to you now. Golden Ocean and Euronav are merging. Golden Ocean is being taken over by CMB Tech, or rather Euronav, through a share-based merger. The current dividends are intentionally low because capital is tied up in the deal. In the long term, this will create a huge diversified player with over 250 modern ships. As a result, they are in a stronger position. The exchange ratio is such that for each Golden Ocean share you hold, you receive 0.95 CMB Tech shares. I would say we've already talked a lot around the topic. Now I would say let's invest, let's analyze the whole thing using the Investing Pro tool. Let's take a quick look at Golden Ocean. That probably won't make much sense. Personally, at the time, I even bought more Golden Ocean shares because Golden Ocean's price had dropped significantly, and for me, the exchange ratio was actually attractive. So I preferred to buy Golden Ocean shares and then have them exchanged later on. Investing Pro is currently even running a summer promotion. There you can secure up to 50% off the professional version. You can find the affiliate link below in the video description. As we can see here, we currently have a dividend of 2.24, a payout ratio of 184.66%, and you can also clearly see that they have sometimes had very high distributions. Let's take a quick look at the financial health, although that probably doesn't make much sense anyway, since they're going to be acquired. That's why I won't go into too much detail about it. I think in the next video I'll explain and talk a bit more about Euronav. We can also analyze that again in a bit more detail if you'd like. But I think for Golden Ocean this should definitely be sufficient for now. Now we come to stock number 2, Star Bulk Carriers. A Greek shipping company, the largest diversified bulk fleet, covering almost all bulk routes worldwide. Here we have very low operating costs per ship. We have a consistent fleet modernization plan, debt reduction over several quarters, and this is exactly what strengthens the distribution base. My entry price was €13.92 with a total investment of €208.80. The current value per share is €16.40. In total, I hold 15 shares. A current price gain of €37.20 and a dividend of €1.23. We have a dividend growth of 6.21% over 3 years, and over 5 years it's even 120%. That's because for a long time they didn't pay any dividends. The quarterly dividend is variable. It is based on the operating cash flow after capex and debt service. In boom periods, dividend yields of up to 15% are possible. Why do I hold this stock in my portfolio? It covers all ship classes, is less dependent on a single bulk segment, and the management is considered very shareholder friendly. So let's go through all the data again here. The 52-week market range is between 10 and 20 euros. Analysts see a price here ranging from 16 to 20 euros. The analyst target is 18 euros and 6 cents. The financial situation is currently showing good performance. The dividend is currently at 1.05%. However, I could imagine that if the debt reduction continues to work as well as it currently does, the dividend here will also be higher in the future. According to this current table, Star Bulk is undervalued with a potential upside of 29.7%. Stock number 3, Genco Shipping. An American shipping company. Focus on Supramax and Ultramax vessels which can be flexibly deployed between different ports and cargoes. The fundamentals, there is a very solid balance sheet. We have low levels of debt. We have a high proportion of modern ships which are efficient and competitive, strong focus on CO2 emissions and environmental regulations. The dividend policy, they pay quarterly dividends. This is directly based on free cash flow. The goal to maintain payouts even during weaker periods. Here, we have an entry price of €11.88 with a total investment of only €118.80 for 10 shares, currently at €14.19. This corresponds to an unrealized gain of €23.10. The current dividend is at 7.88, and we can also see here that the 3-year dividend growth is at 73.82%, and over 5 years it's at 55.85%. I think that really speaks for itself. The current 52-week high and low is between 10 and 17 euros. Currently we're at 14 euros and 14 cents. The analysts have set a target of 17 euros and 36 cents. The current dividend is at 3.72 with a payout ratio of 334.25%. Why do I hold Genco Shipping and Trading in my portfolio? Flexibility in deployment protects against severe slumps on individual routes, offering a good risk-reward profile in the bulk sector. Now we've finished the first segment. Let's start with the second segment, namely container ships. MPC Container Ships, a Norwegian shipping company, specializes in smaller container ships supplying major hubs from smaller ports. Focus on regional markets, for example Asia, the Pacific and the Mediterranean. Less dependent on the major Trans-Pacific or Asia-Europe routes. Long-term charter contracts secure revenues here. My entry point was at €1.50. In total, I hold 263 shares with a gain of €47.66 and a dividend of €19.75. The dividend policy, extremely high payouts during boom phases, sometimes over 25% dividend yield. Currently moderate, but still a solid base dividend. The 52-week range is between 1 and 2 euros. Currently, we are at €1.67. The analyst target is at €1.44. At the moment, we have a dividend of 19.91% with a payout ratio of 74.57%. We are also in a very good financial position. Why do I keep it in my portfolio? Defensive niche in the container sector, stable income through charter contracts, plus upside potential if the spot market picks up again. Hapag-Lloyd, a German shipping company, the 5th largest container carrier in the world. Member of the alliance with strategic partnerships on key routes. Global network, a modern fleet, and strong cost control. Very high profits in boom years. Currently, we are seeing a normalization. The dividend policy, no fixed payout ratio. Payouts depend on annual profits. 2022 saw a record dividend, currently much lower, but still attractive. Here, we entered at €157.20 for 2 shares, currently at €131.10 with a dividend of €16.40. Here we see dividend growth over 3 years of 38.26% and over 5 years even 128.04%. That really speaks for itself. The 52-week high and low were €108 and €175. Analysts have set a target here of €113.73. Currently, we see a dividend yield of 6.25% with a payout ratio of 64.71%. Here, in 2023, there is a regular dividend of €63. Why do I hold it in my portfolio? A global blue chip in the container sector. In the long term, a stable market share benefits from trade growth. Stock number 6, Global Ship Lease, a specialist in purchasing and long-term chartering of container ships. Customers are major shipping lines such as Maersk. Revenues come predominantly from long-term charter contracts, providing predictable cash flow and moderate debt compared to competitors. The dividend policy, relatively stable dividends, less dependent on short-term market fluctuations. A solid payout ratio, with the payout ratio being conservative. We entered here at €22.58 with a total of 10 shares. The current value is €26 too. We have a gain of €34.40 and dividends totaling €4.59. In the last 3 years, we had dividend growth of 33.64%. The next payout date has already been announced, for September 4th. Anyone who buys by August 21st, 2005 could still collect the 45 cents here. The 52-week high and low ranged from 15 to 27 euros. The analysts have set a target here of 30 euros and 65 cents. The dividend here is 6.98% with a payout ratio of 19.44%. The company is in a very good financial position. Why do I hold this stock in my portfolio? A secure cash flow share in the container segment provides stability, while liner shipping companies are more volatile. With these 6 stocks, I cover everything in the bulk and container shipping sector, from raw material transport to global trade routes. The exciting part? The cycles often run differently, and that's exactly what gives me flexibility in my portfolio. In the next part of the shipping series, we'll take a look at specialized and ro-ro shipping companies. True niches with a high degree of specialization. As always, this is not investment advice. It's just my personal strategy. See you in the next video. Until then, happy investing.